He is considered to be the ombudsman guru for the advocacy and upholding of resident rights. So, Ernie, would you like to tell us a little bit about yourself?
Sure. I am an attorney. I live in Texas, out in the country outside of Austin. I'm licensed in several states. I co-founded the law firm Bedsore.law. We do nursing home litigation from coast to coast. It is the only type of litigation we do. Um, I have been married for 34 years to my wonderful wife, Tommy. We have 3 adult children, one of who works with me in my law firm as an attorney, another one who works with me in my forensic accounting business, who is a data scientist. And I am very happy to be here tonight.
And you forgot one important detail about yourself is that you have extensive trial experience. You've tried over 150 jury trials to verdict, and you have recovered millions of dollars from nursing homes that take advantage of our elderly.
That is true.
So with that said, Ernie, I would like to ask you, please tell us, what is your passion? Why are you doing this?
I do this mainly for 2 reasons. Number one is that I believe that we should try to alleviate suffering whenever possible. And there is a lot of suffering in our world due to poverty, undereducation, mental health issues, but also within the elder population due to the malfeasance of nursing homes and nursing home chains. And so I have made it part of my mission in life to try to help alleviate the suffering of a group of individuals who have no voice and are subject to horrific living conditions. My second reason I do this is because I am a very strong believer in justice. I'm an ex-prosecutor, and I believe that the families deserve justice for the suffering that they have gone through, and the residents deserve justice for what they have gone through. But the flip side of that is I also believe the owners of these nursing homes deserve justice for what they have done.
Love your passion. Okay, let's get started on the PowerPoint presentation.
Yes.
What
Yes.
I want to introduce to everyone is we are going to discuss related party transactions and CMS's role in regulation in nursing home finances and related parties in action.
All right, so we're going to talk about related parties. And what related parties are is they are corporations that are all within the family of a single larger corporation. So on the screen, if we had these 2 nursing homes and they're owned by Tosh Senior Care, and Tosh Senior Care also owns a management company and a real estate holding company, all these companies are related. The parent company is at the top, and everything below them is what is called sibling companies. So if you think of a family, you've got a parent, you've got children, and the children are siblings with each other. And so when we talk about related party transactions, we're talking about the nursing home is doing business with another company within the same family that's all owned by the same company. If we look at CMS's definition of related party, CMS defines related party to be common ownership or control. So when you look at related parties, common ownership or control, the parent company owns or controls all the companies below it. That's very simply what the definition means. So if Nursing Home One does business with that management company, that is a related party transaction that CMS is interested in.
Where is this reported?
This information is reported on what's called the annual cost report. everyone pretty much in the industry just calls it the annual cost report. It is more formally known as CMS Form 2540-10, but nobody refers to it by that name. Everybody just calls it the cost report. And if we look at a cost report, we can see at the top of this screen, Form CMS 2540-10. We also see in the right-hand corner worksheet A81. What that means is this cost report, if you think of an Excel spreadsheet that has a bunch of tabs, a federal cost report has 66 tabs. And the one that has related party transactions on it is tab 881. In CMS's language, that's worksheet A81. So this is where we can find out which related parties are doing business with this facility and how much those transactions are worth. So if we look in column number 3, expense items, we can see that there's a facility lease. There's several payments to the home office. That would be the parent company. That's the home office. And then there's some other administrative expenses that are being paid to a company called United Clinical. And when you add up column 4, you'll see that it adds up to 2.5 million. But if you actually look at that column, you'll see those numbers don't add up to 2.5 million. That's because the template that CMS uses only displays the top 9 entries. And those 9 entries are just in whatever order the facility put them in. In the database where this is stored, it actually holds up to 24 entries. And so you can tell just by adding up that column, there are a lot more related parties to get to 2.5 million. They're just not being displayed here. So in column 4, this is the cost of this is the underlying cost that the related party paid to make this service or product available to the nursing home. So if we look at the top line there, the lease. The company that owns the land and building is a sibling to the facility. And the company that owns the property spent $364,000 to make that property available to the nursing home. So that's probably a mortgage payment, insurance payment, etc. But they were out $364,000. Column 5 tells you what the nursing home paid to that related party. That payment was $522,000. So the cost to the related party, $364,000. Then the related party got paid $522,000. The difference is in column 6. And it is $157,000. And what that means is the facility overpaid the holding company about $157,000 for that transaction. Now, CMS does not have any rules about overpaying related parties. They do not care, and they do not audit it. It's not something that they're concerned with. All they want to know is what's reported here. What was the related party's cost? How much was the related party paid? End of story. So what we see in the bottom line here, line 10, when you added up all the related parties, their cost was about 2.5 million. Column 5, they were paid almost 3 million, which means they were overpaid by $449,000. That's column 6. And you may be sitting there wondering, why does Ernie care about that $449,000 in overpayment? And I will tell you, because that payment impacts staffing.
Where do you get this data from?
You can get this information directly from CMS. And for those who might not be familiar with that acronym, CMS stands for the Centers for Medicare and Medicaid Services. It is a ginormous federal agency that oversees all of Medicare and Medicaid. And you can send them a Freedom of Information request, also known as a FOIA request, and specifically ask for this information. And on this slide, I show you what that looks like. You can actually go on the internet, and if you type in CMS FOIA request, it'll send you to a website that has instructions on how to do this. And you just send them a letter similar to this, except you don't send them a letter. You can actually just make up a letter, and then you can just attach it to an email, and you can actually send it by email now. And so you just let them know you want CMS 2540-10, which is the cost report, which facility you're looking for, and over what time period you're looking for. And so you send that to them, and it does say in here that you'd be willing to pay up to $250. That's just something that CMS requires that you put in there to let them know that you're willing to pay for it if they end up having to go do something miraculous to find this, but they will not charge you for this. And before they would charge you, they'd send you an invoice to actually find out if you would actually pay it or not. So they don't charge for cost reports. They will just email you a link and say your cost reports are in this folder. Go to this link. You go there, you download it. Now you have the information.
Ernie, is this information available to the general public?
It is. Anybody can file a FOIA request and get this information.
Good to know. What is the basis for related party payments?
The basis is what in the law practice is called the reasonably prudent buyer standard. And CMS actually defines this to be a cost that must not exceed the amount a prudent and cost-conscious buyer would pay for comparable goods or services. So what this boils down to is, if you're doing business as a facility with a related company, you're not going to overpay them for their services or their goods. It would be, and so what CMS is saying here is that you shouldn't pay the related party any more than you would pay an unrelated party. And that is the standard that CMS expects. Unfortunately, CMS does not enforce that standard. And we see excessive payments to related parties all the time. And that brings us to why we're interested in this information. And it all comes down to the income statement of the facility. So this is the income statement for facility number one in our little corporation that has 2 nursing homes in it. And our nursing home had total patient revenues of 16 million. That was our billing. But we weren't able to collect about 1.75 million of that, so we had to write that off as bad debt. So we actually made 14.25 million. That is how much money hit the bank account. We spent 13 million for total operating expenses. So our revenue was 14.25 million, expenses 13 million. You just subtract expenses from revenue, and our profit was $1.25 million for that 1 year. So we had $1.25 million in profit. Now, the problem that causes is, how can we go to the legislature and ask for more money if we made $1.25 million in profit? We can't go cry poverty if we're making $1 million. Also, having $1 million in profit makes you a much more advantageous target for litigation. So we need to figure out how to get rid of our profits so we don't look quite so profitable. And the way you do that is through the operating expenses. Our net revenue is set. You know, what we put in the bank is what we put in the bank. We can't really manipulate that number, but we can manipulate our operating expense number. And so what we do is we use related party transactions. So again, nursing home number one has made $1.25 million in profit. So how do we get rid of that? Well, what we do is we take the land and building that belongs to nursing home number one, and we create a new LLC. It's called Real Estate Holding Company, and we move the land and building into that real estate holding company. It is no longer an asset of nursing home number one. It is now an asset of the real estate holding company. And once we do that, we can now use the real estate holding company to manipulate our income statement. And so this is how we fix the income statement. Again, we had 13 million in expenses, but we owned our land and building at that time. And at that time, we were making a $500,000 mortgage payment and $100,000 a year in taxes. So our land and building cost us $600,000, and that $600,000 is part of that 13 million. Okay. So what we do is, again, we moved our land and building over to another LLC, and now we're going to lease the land and building for $2 million. And what that does is it increases our expenses by 1.4 million. We went from 600,000 in expenses for the land and building, and now we have a $2 million expense. And what that does is that creates a siphon of 1.4 million. That's an additional 1.4 million that is pulled out of the nursing home, and now it's sitting over in the real estate holding company. And so what that does is it takes our original income statement that had 13 million in expenses and 1.25 million in profits. And now we increase from 13 million to 14.4 million in expenses. And that drops our profitability to a $150,000 loss. And now that we have a $150,000 loss, we don't look so attractive for litigation. We also have the ability to go to the legislature and cry for more money. We're all going bankrupt. We need more money. We're almost bankrupt. You know, all these elderly people are going to be out on the street if you don't pay us more money. And that's what they do. And the real estate holding company has that additional, 1.25 million of profit got moved over to them. But we don't see that anymore. It's gone. What it also does is when we're litigating against a facility that does this, we're saying that they should have had an additional $500,000 in staffing. They throw up their hands and say, how in the world were we paid for another $500,000 in staffing? We lost $150,000 that year. And that is a very effective argument if the attorney across the table doesn't understand how nursing home corporations are structured and what their finance is. If you're one of the people that understands this, where there are a great number of us that do understand it, that argument falls on deaf ears because we know exactly where the money is. The money's in the real estate holding. And that money could have stayed in the nursing home and paid for additional staffing if the corporate parent had chosen to do that.
No transparency. equals hidden money, horrible outcomes. What do you mean by that, Ernie?
Well, hidden money, obviously, we've been discussing that. When you look at related party transactions, they are hiding the money from the general public. And then as they do that, they're creating horrible outcomes for the residents of those facilities. You know, we see multiple falls with fractures and, mortal head wounds. We see tremendous numbers of pressure injuries that result in terrible infections and death, dehydration, malnutrition, infections that go undiagnosed and untreated to the point of becoming septic and causing death. Horrific outcomes that are all tied to understaffing because they pulled the money out of the facility and hid it. So the no transparency comes in when you understand what filings CMS is requiring from the nursing homes. CMS requires that nursing home number one file an annual cost report, just like we saw. It says this is the income, this is the expenses, this is the profitability or losses. These are our assets, which are going to be almost nothing because they put them into other corporations. And so we know that nursing home number one and nursing home number two are filing CMS Form 2540-10. But CMS does not require the real estate holding company to file anything. And it doesn't require the management company to file anything. And it doesn't require Posh Senior Care, the parent corporation, to file a corporate filing for the entire structure. So an analogy that I like to use is if somebody gave you the last inch of a tentacle, had a little suction cup on it, little end of the tentacle, and said, what animal did this come from? You could look at that and think, okay, it's a suction cup, so it must be an octopus, a squid, cuttlefish. You're not sure though. Pretty sure it's a cephalopod, but you're not sure what type of cephalopod. Well, that's really what we're looking at here. Those nursing home cost reports are the last inch of this corporate structure. We have no idea what's above them. We have no idea how much money they're making or where that money is going. And we do know that the cost reports that are filed are manipulated because I just showed you how they did it.
Does this affect staffing?
It definitely affects staffing. Okay. It affects staffing because all these corporate shells, in the case where we just looked at where they're using the holding company with the land and building, this protects the assets of the corporation. The related party transaction siphons money, so the facility doesn't show as big a profit. And both of those directly lead to understaffing. And this is how that happens. The first question you ask is, why would a facility owner understaff? And the answer is because it increases the profits to the owners. The single largest expense of a nursing home is labor. The vast, vast majority of that labor is nursing care. And within that, the most expensive labor is RNs. So when you look at for-profit corporations that run nursing homes, which is the vast majority of nursing homes in the United States are for-profit, they will drastically understaff RNs. They will also usually understaff CNAs, certified nursing assistants, but they won't understaff the nursing assistants to the level that they do the RNs. The RNs are cut to almost nothing. The reason they do that is because that increases their profitability. For every dollar they don't have to pay for labor, that's another dollar of profit to the owners. And then to hide that, they siphon the money into related parties. And then they show you the manipulated financial statements and say, oh, look, we lost money. Not only do we not have money for this year's staffing, and that's why we couldn't staff better, but we're probably going to have to cut staffing even more next year because we lost money this year. So it's a great excuse to cut staffing even more. At the same time they're doing that, and they are getting sued by attorneys like me, they have moved all their assets into shell companies like the real estate holding company. And in litigation, I'm suing the corporation that owns the license, which is the nursing home. I'm suing the management company. I'm trying to sue the parent company. But I can't sue the real estate holding company because the real estate holding company didn't do anything that affected the care in my case. So that company that holds their biggest asset by far is completely shielded from litigation. I can't get to it. And so that encourages them to understaff even more because the penalty of losing their biggest assets is not on the table.
What is the biggest question?
In my mind, the biggest question is poor care due to under reimbursement, or is poor care due to underutilization? And what I mean by that is if you look at the two sides of the argument that has been in the public for decades, the industry would have us believe that they do not get enough reimbursement, and because of that, they cannot provide better care. And so their argument is poor care is due to under reimbursement. Advocates in the same industry will tell you that it is not under reimbursement, it is underutilization, meaning that the money that is paid to the corporations is plenty of money to have better care, but that the corporations don't spend that money on care. They take that money and give it to the owners as profits. And therefore, the taxpayer money is underutilized. And so that is the biggest question: under reimbursement or underutilization?
Is there an easy answer?
There is an easy answer. And that easy answer is consolidated financial reports. Right now, if you think back to the structure that we showed you earlier, where the two nursing homes at the very bottom are required to file manipulated financial statements. Instead, let's take that green arrow and run it all the way to the top and point it at the parent corporation and say, if you are a corporation operating nursing homes in the United States, you must file consolidated financial statements. And what that means is that is income statements, expense statements, your balance sheets, cash flow statements that cover the entire corporate structure from the parent company down, capturing all of the related parties. And if you do that, you will immediately answer the question, is it under reimbursement or is it underutilization? Because if it's under reimbursement, you'll see that the owners of these giant corporations are making very little, if any, money. But if it turns out that they're making hundreds of millions of dollars in profit every year, then you will know that the answer is underutilization. And when we go and do our litigation, one company I'm in litigation with right now in California has over 70 facilities. Its business structure includes over 400 different LLCs. So tracking the money through that is virtually impossible. But the owner, there's a single owner that owns the entire thing, is a billionaire. And my comment to the world is, you don't become a billionaire in the nursing home industry. if you're losing money every year? So I think we know what the answer is already. The answer is underutilization. We just need to be able to prove it. And we can't prove it without consolidated financial statements. The other thing about transparency is ownership. Right now, these facilities change hands so often, it's like cards in a poker game. Every couple of years, the facility will change ownership. And so a lot of times we're not sure who owns it because CMS is so far behind tracking ownership that you can't really use CMS's databases with any type of confidence that who they list as the owner is actually who actually owns it today. So ownership transparency is we want to know who owns every facility, and we want to know back to individual investors if those investors own 5% or more of a facility. The reason here is because sometimes we're able to track it back to, say, a private equity pool that owns this nursing home chain, but we want to know who are the investors in that private equity pool, because those are the individuals who are making the decisions that are killing people, and their names should be known. This is my contact information. If anybody has questions or comments that they would like to make, please contact me at my email address, or you can call my office number. I'll be more than happy to talk with you.
Thank you for your time, Ernie.
Absolutely.